I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, author of Why Gold, Why Now? Thank you so much for joining me today. Always great to see you.
Thanks for having me.
Of course. So we're at the beginning of a new year. We have a lot to talk about. When it comes to gold, I want to start by looking back at 2022 first. So what I've been hearing over and over again is, gold was quite resilient last year. But I think that there was still some disappointment from quite a few investors about its performance. So to begin, could you put gold's performance last year in context for everybody?
Yeah, sure, definitely. I mean, people want crypto returns. They want their 20,000% gains in 6 weeks or something. That's the mindset. We just went through that, right? That was 2021, late 2020. Your cousin would tell you about some stupid, company that is non-existent now, and it would go up 2,000% in a week. Remember that? So anyway, that's where people's minds is. But last year, if you had money in oil or energy stocks and gold, you had a great year. I mean, in fact, people that were complaining, you think, what are these people talking about? Chevron was up, I don't know, 60% or something during the year, and gold was flat, barely, just barely moved. And people say, well, that's nothing to be happy about. But look, I mean, Facebook was down tremendous declines in the stock value. Amazon, I mean, they went down, came back, went down again. It was classic bear market behavior. So, I mean, I just think it all depends on the audience, right? I mean, people with stable net worth are happy when they have a year where, some energy stocks go up a lot and the gold price is flat and they can make some moves and they're not under pressure. But people that are gamblers that tend to save up some money, risk big on something, have a blowout, and need somebody to blame, then they don't like gold. But let me just say something that's very, very interesting. And I think, see, gold's 1940 US right now. It's on this screen here. And what's interesting is I watch this thing every day for 20 years. So I really know what's going on in this market. And when the Ukraine situation happened, the gold price went to 2080 or something, 2083 or something. And it was in the middle of the night in February. I saw this happening. And then it promptly was slammed back down into the low 1600s through the course of the year. But something interesting happened when the price was hit hard after the Ukraine situation. There were 40 million ounces sold in the futures market in one session, and that's an entire year's worth of mining supply. And so what I want people to understand is that there's two things in the gold market. There's the spot market, which means the actual price of the gold that's changing hands, and there's a futures market. And the futures market is much bigger than the spot market. And in the futures market, there's no actual gold changing hands. And so what happens is the futures market is what sets the price. So my really good friend that's written about in my gold book, one of my dealers told me recently, he said the gold price has nothing to do with actual people buying gold. So like if everybody went out and bought watermelons, then there would be a watermelon shortage, and then the price of watermelons would go up. And the evidence of that is that after the pandemic, the price of avocados was like $5 each at the Whole Foods at one point, right? Because there's no avocados. So the price went up. That's capitalism. But the gold market is not capitalism. The futures price is what sets the spot price. And I don't think people understand what I'm talking about, so it's okay. But I'm just telling you that has changed. So what I'm saying is that change where the gold price since November has gone from low 1600s to 1940, and it looks like it's going to walk right upstairs up to 2000. And at 2000, I suspect that it'll get new people interested. And then new people get interested, and first thing they do is they go to Amazon and they buy E.B. Tucker's book, Why Gold, Why Now, to figure out how it works. But the second thing they do is get involved. And when I say that would have an effect on the gold stocks, you can't even imagine. It's like the Mojave Desert in the gold business. Like the Metallo royalty is one of the best royalty companies, I think. I helped put it together. Have a lot of stock in it that I bought, and Metallo's peers have all been acquired. I mean, there's been 9 takeovers in the royalty business in the last 20 months, and you can't even find any headlines about it. It's crazy. I mean, so my point is that there's almost no investment options left. So the gold price is walking higher because I'm not seeing this shenanigans that we saw in the futures market keeping the gold price down. I'm not seeing that, because when the gold price was 1625 in November, the actual cost of getting an ounce of gold was about 1860. So what I'm saying to you is that the price of an ounce of gold didn't go down. The price of the futures went down. So now the price of gold is 1940. You can get a coin for $2,000. This is a premium, but the futures price, the futures market is not commanding the price. And that's why you're seeing the price. You notice it's not doing anything crazy. It's just going up like, $10 and then down 5 and then up 15. It's slow and steady, and there's no news stories. There's nothing in the major papers. There's nothing in the financial journals. Nothing, zero. And that's why I think that it'll keep going. But 2000 is the number to watch. That's when people get interested. Nobody's interested yet. It's early. It's very, very early.
Okay, so let me ask this: when you talk about factors that actually influence the gold price, what about supply? Because we hear all the time that the major miners do not have enough reserves. They need to make acquisitions on the exploration side. That hasn't been going as strong as it should be. So what bearing does supply then have on the gold price?
Well, it's complicated because it actually has no bearing on the gold price. But your statement is correct. Your analysis of the inventory situation in the ground is correct. If you look, there's not really any companies to be bought. Now I'm going to make a speculation, and I hope I'm not immediately right, because it'll appear like I knew something, which I don't. But look around in the middle market of the gold business. Who is left in that business? There are not many companies left. Okay. So you look at a company like IAMGOLD and you figure, Metallo has royalties on IAMGOLD's key asset. And so that's why I pay attention to IAMGOLD, because I'm very interested in what the company's doing. And IAMGOLD, you think to yourself, why is it somebody buying IAMGOLD? I mean, there's nothing else to buy. I mean, there's not really any. I mean, of course, you have a company with a Mexican project and a company. Okay, there's some companies, but there's not any companies that are really material that, say a multi-billion-dollar mining company like a Barrick, or an Agnico or something. Okay, Newmont, what are they going to buy? I mean, they're not going to buy an Explorer. I mean, it's ridiculous because it's too small. It's like, even if they find something, it doesn't move the needle. And so you start thinking they got to buy something with a little bit of weight, but not quite enough weight to be big. That used to be called the junior sector. That was the junior miners. They had a couple of mines, small. They had some things going on. They had an exploration team. The Barrick could buy them and fire half the people and, take over the projects. And that's how the business worked. But it's all gone. So what are they going to do? I mean, IAMGOLD is just a sitting duck. It's the only company. I mean, you look at, Alamos is bigger than IAMGOLD. That's a great company. These Alamos stock is way up since the fall. It's way up. So maybe Alamos is too big, though, to be considered like a real serious target. But what I'm saying is that the ranks are small. It's very, 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 very small. The things that you can buy are very, very limited if you're a big gold mining company. But with that being said, supply has no effect on price in the gold market. Now, again, in the avocado market, lower supply means higher prices, but the avocado market doesn't have avocado futures. If they had avocado futures, then the lords of the avocado world could just sell billions of avocados in the futures market that they never intend to grow, and the price would get slammed down to 50 cents, and then everybody would say, price didn't go up. I guess it doesn't really matter. And you don't even need to plant trees. You just have to have a futures account. It's so easy. That's the gold business. So I don't know when that changes. I mean, you got to think China's the biggest producer. Russia's a huge producer. These people they're not selling this gold. They're not selling. In fact, they're buying it. So you have like what, 3,000 tons a year produced, maybe a little more. You start thinking what goes. I mean, I have several gold teeth in the back of the dentist won't put them in the front, only the back. But dentistry, computers, Indian housewives hoarding gold. You start adding all these things up, there's no gold left. And I don't think in the US it doesn't matter because nobody wants gold, but this eventually becomes a problem. And so I don't know when that happens, but I can tell you this much. I have had a very fun and successful career so far in the investment business, which started in the 2002 recession. That's when I started working. So I've had, it's not a long time. Some people have been in the business since the 80s. So, okay, I'm not that old, but I'm pretty old now. And I can tell you that I have not made money by guessing time. Like, that's a really difficult thing to do. What I've made all the money I've ever made, what I've made doing is saying, seems like a good time to do this. And so I'll do this. And then sometimes it works quickly, sometimes it works slowly. But in the case of the gold market, I look at the royalty companies and I think to myself, you've got to be crazy to not be involved in the royalty business, because you have no employees and you have decades of exposure to new gold mining coming in. Like Metalla, everyone talks bad about Metalla because they don't start producing gold till like 2024, 25, 26. And I'm saying to them, you don't want to be producing gold last year. The price wasn't going up. You want to be producing gold next year and the next year and the next year, and you get 1% of that. It's amazing. I don't know anything else where you can do that. I mean, I look around at the things to buy in the market and I think, I don't know what else. I can't. I'm hoping somebody will show me something better. And my LinkedIn, don't stop sending me crypto ideas, because that's now in a bear market. So it's maybe I have a friend that's very smart in this field. I talked to him Monday night in California. I told him, just be patient, because I don't think people have given up hope yet. When they give up hope, that's when you want to get involved. You know what I'm talking about. When people say, I'm never going to touch one of these gold mining stocks again, that's when it's cheap. All right. That's how you know it's cheap. And it hasn't happened in the crypto space yet. But anyway, I just want to help people understand how I think about these things, because I don't know sometimes if people understand that the way you think is what dictates your success. That's where the real action is.
I think that's really helpful. And I have one more point on gold supply, because you made me think of something. We have all these programs right now when it comes to critical metals, when it comes to energy. There's a lot of government influence programs, things that they want to help us get that supply. Nobody's really talking about or worrying about gold supply, right? So do you have any thoughts on that there?
Okay, so the number one thing that you learn as you become an adult, if you're awake, if you're asleep, then you don't learn this, but if you're awake, is that you slowly start to realize that the government has not done very much to help you. So most of the things that they do have actually made things harder for you. So anytime they say, we're going to help you do something, you have to be immediately suspicious. Now, I don't ever argue with these people, because you have to understand they have so many lawyers and so many weapons that you're not going to win that argument. But I'm always skeptical. Now, the reason why they're interested in securing critical metals is because as we transition into an electric economy, into an electrified economy instead of a economy powered by hydrocarbon sources for the most part, right? As we make that transition, the government has to keep GDP stable, at least, if not a little bit growing. Okay. And you can't do that without access to these metals, because you can't build grid storage without copper. You can't build an electric car without nickel, a nice one at least. You can't put windmills up without lithium, as a storage component for the, and I've been studying recently the green hydrogen movement. It's really fascinating, but you can't do any of these things without certain key metals. And China has a lot of the rare earth metals, and Indonesia has a lot of nickel, and they're keeping it. And Latin America has a lot of copper, and it's not treating it with a capitalist mindset, and it's a big problem. And so the governments realize that if they don't have these things, they'll be answering to what I like to call the global south, which means, kind of, if you picture the globe, there's a lot of the countries that we're talking about, or regions we're talking about, don't feel that they've been properly represented in the Western world order since World War II, and they're not happy about that. And so the U.S. realizes that we're going to have to do what someone tells us on the other side of the globe, okay? Because we can't get any nickel. So that's a huge problem. Now, the reason why I'm painting that picture for you is because what do you need gold for? The only reason you need gold, other than for high quality dental work, is to protect yourself against an out of control government, that controls money, which affects your entire life's work, right? I mean, it's a huge problem. That's what you need gold for. And why would you need that? You don't trust us to help you? Do you see what I'm saying? So there's never going to be a program to help you buy gold. Never. In fact, what's going to happen is, like in my book, I show the articles from the 30s when they were saying daily the government needs the gold. Anybody that has gold is a traitor, a subversive, a dangerous person. Why would they want this gold? They're hurting the government. Turn somebody in if they have it. There's a fine, there's jail time. This is more like it, okay? Now that's when you know you need something, because as soon as they got all the gold, they raised the price. So the critical metal thing is economic. The gold piece is more about protecting your life's work. And I hope people can see that, because those are two very different things.
Right. And so meanwhile, we've got, government central banks, they don't necessarily want you to have gold, but we know from buying trends that we saw, especially toward the end of last year, that they do want to have it.
Yeah.
Meanwhile, yeah. So let's talk about that. Do you see that buying trend continuing into 2023?
Probably, but it's hard for us to know, because they, of course, don't tell you what they're doing. And I was telling a friend last week that you have to think about this like, if I'm buying Metallo, and I'm buying a lot of Metallo, which I have bought a lot of Metallo since I've been working with the company for 5 years, maybe I'm not going to tell you until I make my filing, right? So I'm not going to say, hey, I'm going to buy a lot of stock later. I just make the filing that says, oh, for the last 5 days, I bought a lot of stock, right? I mean, so what I'm saying to you is that, why would the central bank say this year we're really negative on the US dollar? We really don't like the United States, so we're going to take some of those dollars and buy a lot of gold. Because they say, actually, we'll tell you that after we bought the gold. And maybe we won't even tell you how much gold we bought. But the point is that what we know is that they are buying gold. And the World Gold Council tracks that. And a lot of groups track that. And it's not one country, by the way. I mean, you have some African nations now saying, why do we have to sell our oil in dollars? Why do we have to do that? Why don't we sell it, and take gold for our oil? And the US says, no, you can't do that, or we'll overthrow your leadership. So in the name of freedom. So basically, the point is that if they say, when I read the headline that they bought X number of tons, I usually say probably 50% more.
Okay. And so just because you started to talk about this trend away from the dollar, countries don't necessarily want to use it anymore. And you have the US being like, no, actually you have to, we're going to stop you from doing anything else. How much longer can they continue to do that, to put roadblocks in place for countries that may want to diversify away?
A long time. for countries within their sphere. So we just wrapped up 20 years, maybe 25 years of a unipolar world order where the U.S., was the dominant superpower, pretty much stretching its arms around the globe. And that's changing now into what I like to call zones. So you have zones of influence, and I think what you're seeing is the Chinese think that they'll have a zone of influence, that loops around Central Asia, and they'll have a second zone of influence that encompasses resource-rich African nations. The U.S. is trying to carve out its zones, which perhaps may be Central and South America, North America, of course, and maybe they're trying to argue over parts of Southeast Asia. But my point is the U.S. can do that for a long time to anybody that it has enough control over. But it doesn't have control over the Chinese. It doesn't have control over the Russians. So it doesn't have control over vast parts of Africa. So what you want to watch is you want to watch how the world is splitting into zones, because if you're Chinese, then it doesn't make a lot of sense for you to try to do business in the American zone, because it's quite difficult. You have cultural differences. You're starting to see digital banking differences. I mean, the Chinese are trying to loop the Belt Road with a digital yuan currency system that becomes the foundation of their zone, which they want to be able to export the way the Americans have exported over the years. The Americans have used the dollar since the 70s as a kind of a baseline for global trade, using energy, as the energy in the treasury market. It's a very complex system that Kissinger came up with. But basically, the Chinese are trying to do it with the Belt Road, with Africa, with digital yuan. You've seen this come together. U.S. will do it with FedCoin. They'll try to keep it in place with commodities. I mean, so when you see this going on, it's like a grudge match, and you just sit back and you watch. And gold gives you a luxury suite to watch the grudge match. And that's where you want to be. You want to be in the luxury suite. They bring the food to you. You don't have to fight for it. So that's where you want to wait and see how this plays out. But that's what's playing out right now.
Okay, so a couple of questions about these zones that are emerging. That sounds like these countries that are going to work together need to build up their supply chains, which we learned during COVID. Those are fragile. They're not as set in place as we might like them to be. So this sounds like it could take a while. And maybe we could talk about that, and also about how, as an investor, do you approach this? Do you just sit there with your gold? Do you try to stay within your zone? How do you do that?
Well, okay, so let's bring it down to how the average person thinks of us. I mentioned that the gold and energy, so last year, I owned energy stocks. I did great with the energy stocks last year. I didn't do as great with the gold royalty companies, but meanwhile, like I was mentioning, 9 of our competitors got bought out. This is very strange. So how is it your stock's not going up when 9, you're playing musical chairs, remember that game, and the 9 chairs disappeared? I mean, it's crazy that so something's cooking in that business. But one of the things you want to really be careful of as this is all playing out is that the last 10 or 12 years of the US being kind of the dominant leader, a lot of money flowed into the US. So like when people were negative on the US dollar 2009, 10, 11, they were wrong, because what happened was the US was able to pass draconian laws like FACTA and all these different, kind of circling the fences around. And a lot of money came in to the US, and the stocks went higher, and the dollar, was reasonably strong, and the treasury market was liquid. And now what you're seeing is a lot of that's reversing. So you watch the headlines right now. Microsoft laying off people, Google laying off people. And also, you know what else Google did is they cut all these moonshot initiatives that they had, like crazy AI projects and things that weren't viable. They cut these things. So my point is that companies, the biggest US companies, which got really big during the last 12 years or so, are shrinking. and the stock prices are shrinking and money is flowing out. And so when you see this type of transition, you have to extrapolate this and say, if money's going out, then the things that benefited from the money coming in are probably going to get hurt, because nobody came into the US and bought gold stocks for 10 years. So there's no money is going to go out of the gold stocks, right? So no money came in and bought Chevron and Exxon over the last 10 years. The money went out. So my point is that you want to look at it and say, as this money goes out, probably the stocks that benefited are going to get hurt. I want to be careful. And everybody will tell you, oh, Amazon, they send all the packages to me. It's the best stock. Yeah, it's a great company. Don't get me wrong. It's not going anywhere. It's not going to zero. Forget about that. But it might not be the best investment at this moment, because it's laying people off. It's dealing with cost overruns. It's struggling to keep growing at the same price that it was growing. And it was benefiting from unbelievable amounts of capital flowing into the US. The same thing with Apple. It's like, remember, Apple's a $2 trillion company. At one point, everybody's hot on Apple, but it's like, look, it's a telephone company. That's what it is. Like, it's a $2 trillion telephone company. All right. Do you think you can go to $4 trillion? Maybe it might do that, but it's benefited greatly from this surge, and that surge is reversing. And that's all part of the zone situation. Like, as you shift into zones, you want to avoid, half the secret to success with money is avoiding huge pileups, like on the freeway, right? So one of the big pileups is in the tech scene, and you want to be super careful. And you will get the chance to buy some of these tech stocks at much lower prices, but it's not today. And so as you go through this transition, you buy things that are going to benefit from the transition, and you get out of things that are probably going to get hurt from the transition. That's the number one rule. And if you do that, you don't even have to be exactly right with the stocks. Like, you could have bought a decent energy company, like a mediocre one, and done almost as well as if you bought a great energy company like Chevron or Conoco. Conoco is a great energy company. So those did great. Lesser companies did not quite as great, but my point is they did fine. They had a decent year. So my point is, don't overthink it. Don't say, I have to do exactly what you want to do. Is you want to avoid the obvious sectors. Like, if you move away from tech short term, don't worry if one tech stock has a great year. It doesn't really matter. It's that 80% of the tech stocks did not have a great year. That's what you want to avoid. And you want to go into a business where 80%, like the copper mining business, like 80% of the copper mining companies or something have had a great 2 or 3 months recently. That's okay. Hey, you see something? You're shifting away from this and over to this. That's what you want to do.
Okay, and so you mentioned energy was good for you last year. You're still looking at energy in 2023?
You still have some energy stocks. Like, I think there's big problems getting enough diesel in the US. There's no refineries and all these things. And so I think, but my expectations are a bit down because there was a good run, and I think the oil price probably goes a little higher. I think that the OPEC has never had as much power as it has at this current moment. So I think that's bullish for energy. I think that the high interest rates in the US make it very hard for companies to borrow and drill wells all over the place. If anybody's ever driven through West Texas or New Mexico, northeastern New Mexico, it's totally unbelievable how many shale wells there are there. You just can't. You're driving down this road in the middle of nowhere, and like thousands of these things, and you just think to yourself, this is nuts. But a lot of that's financed with very cheap money, and that money's not there. So I think you're going to see the best projects be produced, but you're going to see the fringe projects not find capital. And so I think all that's happening in the energy business. But look, there's room for energy in my portfolio. That's for sure. Definitely. It's the green. As you know, I also am quite involved in the green space. With copper royalty companies and carbon credit royalty companies. Okay, so, but within that, I still feel like the 90 million barrels a day of oil that are being burned, it's not going to go to zero. And since you're not funding any new production to speak of, I think offshore they are, but then I'm just like, this is not going away. It's going to go down, it's going to transition, but there's room for it. There's room for it in the portfolio.
Yeah, I think that's really useful for people to hear because we do know that you have that nickel and copper focus, but it's good to know that there are room for other things like oil in your portfolio. So if we take it back to gold and precious metals, so you mentioned 2000 is the level to watch for gold. I know you said you don't really like to try to time it, but is that a 2023 story? And is silver, where do you see silver going this year?
So I mean, it's got to be 2000's got to be a 2023 story. I mean, the way it looks right now, you're $60 away. I think it could happen fast. I mean, the silver price has got to break 30. That's the deal. It's got to break 30. I mean, it's at 30 is like if you want to buy silver, I would take a pencil or pen and draw a line at 30 and say to yourself, when I see it break 30, things are going to get crazy. And when is it going to break 30? I mean, it could break 30 in a couple of weeks, or it could take a year. It's impossible. I mean, it's stunning to me that the silver price is just barely above where it was 15 years ago. I mean, I remember, it breaks 20 and you're like, wow. And it's, then now it's what is it today? It's 24, so stunning to me. I mean, it's really wild. And so with the silver price, I think when you break 30, it attracts attention. What I want people to think about is like, if you ever see a video of one person dancing and then someone joins them and then 10 people join them and then 100 people join in, and before you know it, you have like a mob of people dancing. And that's how a crowd builds. So the gold market doesn't even have one person dancing. But what you want to watch is when this starts, then you have people getting interested. You have people attending more conferences. You have people on analyst calls and calling up the bank and saying, how do I, I'm a family office. How do I buy some gold stocks? Maybe I'll buy the ETF. Now, maybe I'll look at the stocks in the ETF and maybe I'll speculate a little bit. That's how the market goes. And that still hasn't started. What I'm saying is 1940 gold price hasn't even started that. So that's all ahead of us. So I think 2000 is what to watch in gold, and 30 is what to watch in silver.
All right, so that gives us something to keep an eye on, and hopefully people are positioned ahead of those moves so they don't get in with the crowd.
Well, the royalty company should go more. I mean, that's the thing. If the gold price moves an inch, the royalty company should move a foot. I mean, that's how it works. I mean, because the royalty companies are going to collect that extra revenue for 30, 40 years. That's the whole premise of royalties, which I explain in my book, is that you get, if the gold price goes up $50, you're looking at 30 years of $50 more. It's crazy. So and then they've not seen any attention. Believe me, I'm on this thing every day, and nobody's in there. So I mean, it's wild, and that means there's so much room to go that you have. When I bought rental property in the US at $10 a square foot, which for people that don't know anything about property, that's like you can barely even put the flooring down for $10 a foot. So that's how bombed out the market was. And just so people understand, I had like plenty of time to buy. I mean, it wasn't like I had to race and punch someone to get to the house first. The realtors wouldn't even show the house. They would just give me a code and go in the place, and it was no air conditioning and boards on the windows. And the lady'd say, you're insane to buy that. Do you see what I mean? So you had plenty of time. It's not like when you look at these, when this market takes off, like let's say it takes off, money flows in, you're going to look back and you're going to say, wow, I mean, I had months to look at this thing, like study it and do all this stuff. It wasn't like I had 10 minutes to go and buy the stock. But then once it goes, it never comes back. I mean, those houses I bought for $10 a foot, I was in the market selling those things for 15 times that, more, 20 times that. I mean, it was crazy. And when I was doing that, I had 5 offers. So when I was buying, I was the only offer. When I was selling, I had 5 offers. You get how this goes? So my point is, once this moves, it never comes back. Metallo doesn't go from 7 Canadian to 17 and then come back to 7 to pick you up because you were late for the bus and then take you back up. It doesn't work that way. There's too many people involved then. There's too many eyeballs. Now there's no eyeballs. So you want to get involved when you want to take a look when there's no eyeballs on it. You can have as much time as you want to read everything, and you can do it at your leisure.
All right. So as we're wrapping up, I wonder if you would share any final advice for investors in 2023. I remember the last advice we got from you back in the summer was kind of to take a break, take a step back. So what are you thinking right now?
Turned out that was good advice, right? I mean, there wasn't a lot you could do. I mean, I remember that, and you look back and what investments have gone up since then. I mean, almost nothing. So now I think what you want to do is you want to do all your homework and figure out where you want to put your money. And you want to do that this quarter, because the Federal Reserve is going to raise interest rates until there's massive pain. And right now, we still don't see massive pain. People are running through their savings. They are selling things to pay for things that they need. They are still optimistic, and reality has not set in for companies and for people. But that's going to happen fast. When that happens, it's going to be very quick. And I think you're going to see new shifting of policies, and you want to be ready before that happens. So now you had a nice 6-month break to relax and go see a lot of Fish concerts and whatever it is that you like to do. And now your head is clear and your eyes are open, and you can study. You can go to the Metalla website and read the entire investor presentation, and have yourself a lot of like excellent coffee while you're doing that, which is what I like to do, and make decisions. And then when you see this pain really come, boom, quickly, and you see the Fed make a move, you're ready. And I would do that. That's what I would do right now. If it was 20 years ago and I was talking to myself 20 years ago, I would say, yeah, do that. You know, spend the next few weeks or weekends or whatever time you have doing that, because that's what you want to know. I mean, people have not read my book. The book's not really about gold. The book's giving you insight into how I think about things and what I've done for 20 years. And I tell you all the secret recipes, because it's not a secret. It's actually quite easy. I mean, you got to position yourself for good luck. I have really good luck. The reason why I have really good luck is because I have a good way of thinking, and I put myself in positions that later look lucky. And that means by doing a lot of homework and studying, and I don't waste time. I have a good time, but I learn and constantly meeting people and traveling, and I'm curious about things, and I want to know about things even that I don't invest in. I don't have any hydrogen investments. I'm reading all about green hydrogen. It's fascinating, absolutely fascinating. So why would I do that? Well, I like it. And so you position yourself for luck. But sometime in the future, I might have an opportunity to put together a company focused on hydrogen. Well, good news. I already know about that. So anyway, so that's what I would do now. It's time to get off the beach and get back to studying. That's what you do. And then you're ready. Then when it happens, people say, wow, you're so lucky. You're not lucky. You were just preparing yourself while everybody else was hoping that the good old days would come back.
Okay, so that's the plan for 2023. Get educated, position yourself for luck. Sounds great. Thank you for that advice. Always great to have you on.
Yeah, thanks for having me. And people can follow me on LinkedIn. You send me a request, I'll take you on LinkedIn. And I post things that I'm doing, things that I think about things, and I don't have anything to sell you. But I mean, I sometimes am sharing with people something I think about that's going on in the news cycle, and I'm sharing some of these things we're talking about. Some of this learning that I do, I'm sharing there, and I'd love to connect with people. And if you haven't gotten my book, please get my book. It's available on Amazon, Audible, Barnes and Noble, all the bookstores. You can get it everywhere.
Okay, sounds great. Thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is E.B. Tucker, author of Why Gold, Why Now?